Well, Shriram Transport recently approved raising close to 1,500 odd crore rupees via rights issue and fixed the issue price at around 570 rupees per share. In fact, additionally, company mentioned that the entitlement ratio for the same would stand at about 3 right shares for every 26 shares held by the eligible shareholders. Now, talking particularly about this stock, it has been on an uptrend, and in fact, this week itself, we have seen the stock gaining more than 8% in trade, and this definitely tells the kind of investor attraction or interest this stock has been garnering. Well, ET Now did speak to the management of Shriram Transport Finance, and Umesh Revankar, the MD and CEO at Shriram Transport Finance, mentioned that the fundraise plan is to bring in some amount of confidence capital in the company. And in fact, additionally, he did say that this rights issue would further strengthen the balance sheet and provide necessary support to the rating agencies on the company's capital raising abilities. Well, he said that they are seeing a good growth opportunity going ahead, and as far as India is concerned, they expect a V-shaped recovery with the transportation activity pickup. Now, another thing that he incrementally mentioned was the fact that rural sector is particularly be the one which is going to fuel the economic recovery. And in fact, given the fact that the harvest has been good and the government has provided the necessary support to the rural areas, ensuring enough cash was available to the people and the consumers, and this definitely will augur well for the entire rural sector. In fact, prediction of above normal monsoon is incrementally going to be really positive for the rural segment. Shriram Transport has a very strong outreach to the customers, particularly in the rural areas, and they hope to leverage on this growth opportunity that is being offered to them. Umesh Revankar also mentioned that almost all of their branches are operational, barring the ones that are in containment zones. And in fact, lately, the collection efficiency has also shown some amount of improvement. April particularly was a tough month and a challenging month in terms of collections owing to the lockdown. But ever since May onwards, they have seen an improvement as far as collections are concerned. Not just this, they are also seeing some amount of uptick as far as inquiries and demand for loans are also concerned. So this all definitely pictures and provides a scenario of a very positive momentum going forward. As far as their product mix is concerned, he mentioned that within the segments that they're present in, almost 40% of their AUM comes from heavy commercial vehicles, while 25% account for LCVs. But having said that, he added that almost 90% of their portfolio is in the used vehicle financing, which has been seeing a lot of traction. So going forward also, he is pretty much optimistic, particularly on the used financing segment. And in a whole, when in our interaction with him, he did sound optimistic as far as the growth outlook is concerned for FY21.